Hey everybody, in my last video we started our conversation about understanding pricing of a house, and we said that the very first place that you can start is understanding the cyclical and seasonal nature of the real estate market, because that's going to affect your prices at a primary level. But then let's drill down a little bit more. What are price expectations, and are prices going up or down? All right, let's start with the first concept. Is it a buyer's market or is it a seller's market? A buyer's market is when the supply of houses on the market exceeds the demand of buyers to buy those houses. So you're going to see houses sitting on the market longer and selling for less than they would in a seller's market. In a seller's market, you see that the demand for houses for buyers exceeds the houses that are on the market in terms of their inventory. And so you see bidding wars, you see buyers competing to get the same house. So you see higher prices, and you also see houses sitting on the market for fewer days. How do you know whether it's a buyer's market or a seller's market? Well, one way that you can look at this is to look at the inventory of homes that's currently on the market. If the inventory is low, it's a seller's market. So we use 6 months as our cutoff. Anything less than 6 months is considered to be a seller's market. As an example, let's look at the months of supply of houses in Bethesda. So this chart shows the last 3 years. As you can see, the level of supply changes. The time period with the highest amount of supply is April 2016 at 4.3 months, but all of these are less than 6 months, and so all are considered to be a seller's market. So how do you calculate the months of supply? It's the current number of houses on the market divided by the number of homes that are selling each month. With high demand from buyers and low supply, then prices will trend up. Now let's discuss absorption rate, which is the rate at which houses are being sold. That's calculated by dividing the number of sales per month by the total number of available homes. So you may notice that this is actually the inverse of the supply calculation. The reason why absorption rate is so helpful is that it helps you see the trends in the market. Is the rate going up or down? If it's going up, then homes are selling faster. So let's look at that same Bethesda data, but for the last year only. As you can see here, the absorption rate and the months of supply. How do you use this information? Let's say you're a seller and you want to put your house on the market in 2 months. And you've been looking at this information and you say there's 5 months of supply of houses right now. The absorption rate's slowing. It's been slowing for a few months, and that you're also starting to see some trends in the national economics that you're like, things seem afoot nationally in let's say unemployment, or in interest rates, or there's a trade dispute or something that you start to see some things are indicating maybe some market shifts. And you're saying, I'm seeing things at the national level, I'm also seeing some things at the local level, and that while it might be a seller's market right now, maybe the market is trending in the other direction. Maybe it's headed towards a buyer's market. So maybe your house is going to claim more money now than it will in even 2 months. Now around here, we tend to be pretty lucky, and we're a little bit insulated from some of the effects that other people saw. You can think of in this recent recession. This area did better than other areas which took a much bigger hit from the recession. But when it's you and you're looking for top dollar, this is still something you want to consider. What is the best timing? Is it really worth waiting 2 more months, or should you just try to sell now? Another important point that we should look at is days on market, which is the amount of days the house is on market when it's actively available for sale before it goes under contract. Let's take a look at these 2 charts. Here we're comparing median and average days on market for Bethesda and DuPont Adams Morgan. So houses that sit on the market for a long time often sell for less than houses that sell quickly, and a low number of days on market is an indication of a seller's market. So we're going to talk about pricing strategies later, but one reason why real estate agents typically don't want sellers to list their house too high above what they expect the market will bear is that these houses tend to sit longer. Once they do, they get less than they would have had they priced their house at the expected market value when they listed. So when you're looking at days on market, if you see that days on market is low, let's say it's 7 days on market, and here let's see, we've got 12 days in May of 2017 in Bethesda. We have 7 days in March of 2018 in Bethesda, and down in the DuPont area we've got, let's see, 12 days and 7 days for the last 2 months. So as you can see, houses in this area, in these two neighborhoods, I've just broken them down by high level areas, not by hyper local neighborhoods within those areas. But as you can see, houses are not sitting for a very long period of time. So it indicates two things. One is it's a seller's market and you have to move quickly, but it also gives you a sense of if you see something you like, you're gonna have to move quickly if you want to get that house. That's a side note, sort of off topic from price expectations. So next time I'm going to talk a little bit about competition, multiple offers, and the emotional value of a house, which is not what it's going to appraise for, maybe not what market value really even should be, but what people are willing to pay for a variety of reasons, because these things are both an indication of where the market is in terms of pricing, but also I think is just a related point. People often say to me, like, why did that house go $80,000 over list price? That's ridiculous. Well, we're going to get into a little bit about that. It's going to be related, but kind of a subset of pricing, and then we'll get back into our pricing. P.S. If you have some pricing questions, if you have something that you're interested in knowing more about, let me know. I'd love to answer that question as part of this series. So send it to me any way you want, on social, on email, on text, on phone call. All of my information is down below.